Hi guys, welcome to this video. So what I'm going to show you today is the trades we took on our trading study live in front of our members this morning. Okay, I'm also going to show you that when one trade is not going your way, I'm going to show you a technique what you can actually still end up being profitable even though it's a losing trade. Let's get into it. So firstly, let me give you a top-down analysis of what price was doing. Now, the way price was, the daily was actually closed respecting the previous highs. So this daily at any point could either close like this and hover in and around this area, it could close above, or push back and test the previous lows on the previous daily candle. Now, me personally, because the previous daily closed respecting, I'm thinking that this daily is going to stay in and around this area. Now, what does that mean then? That means that this daily is going to go up and down, so a consolidation day basically. This daily is indecision. It doesn't know whether it wants to go up or down, so it was a bit of a tricky day today in order to catch some trades. So we would have to go off lower time frames, and that's what we sort of did. So we were looking at the 15-minute time frame. So what we've done for me then, we go down the time frames and we look for zones, clean traffic zones, where price breaks into that area, then pushes straight through that zone. And what we found is the 15-minute time frame, once you've got a close above 1925.09, on the 15 time frame, you do tend to push up to 1926.39. Okay, so we decided that once we got a close above, we'll wait for a pullback on this 15 and we'll get a pendant on the high of the 15. Now what we wanted to do is, as the 15 pulled back steeper, would move the 15 down to the body of this 15 like so. Okay, so this is what we've done. So at the moment, we did put a pendant order for a buy in and around this area. So we've got buy stops on at the moment. Now, it actually took us a while to get, we had to wait another 15 minutes. Actually, 25 minutes we had to wait to get activated on this trade after. Okay, so once we got activated, what happened is the 15 actually drove quite far. Now, it's what happened here. Our take price and move to break even was 1926.46. Now, on my original video, what I did say is, this is our take partial, but I need to confirm it. And what didn't I do? I didn't confirm it. So what happened is price actually pushed up, pushed about 9 pips, and then for some reason stalled and actually closed back in. Okay. Now, I looked back at previous day and realised that actually there is a zone further down. There is an hour zone where wicks are going to and price rejects from, which is around the 9 pips mark from where this trade is. So as you can see, price is quite driving now. We've got some nice profit at the moment. Price is driving. A couple of our guys took partial and moved to break even around the 9 pips mark anyway because they had nice profit. I actually held out because I thought my zone was correct. So this is the thing, always double check your take partial, move to break even zone, and it's got to be the first sign of rejection zone. It's got to be the first one. Okay, but on the hour for me, I did identify a smaller zone just below, literally where price is now. As you can see, price moving now, taps that little area. I'm about 1 pip away for take partial, move to break even, and then you just start watching price to start rejecting, and it's pushing down. And as you can see, guys took partial, move to break even. So the guys who'd done that got stopped out at break even and took their profit. I kept it on because I wanted to wait for that take partial, move to break even to get hit. So this was a valid trade basically. And once I looked back over it, what we realised that actually, if we went off the hourly close above and we went off the body of the hour, that would have been our 10 pips on that zone at that point. So it's just one of them trades. It's a valid trade. It's a profitable trade. That would have worked out. We would have been in. However, I missed it. So what happens now? Well, what happened is it took us into drawdown, like so. So as you can see that 5 minute big wick to the upside, just shy of our take price moved it break even. Then the 5 minute closed back into the range, and then what happened with price? We started heading down. Now our stops were below the hourly low, so if price did want to go back up, it shouldn't be breaking the hourly lows really. Okay. Now as you can see, because we didn't get out at our take price move to break, we've missed it. We're going into drawdown now, and our stops are 1922 down in these levels. Now this is the 5 minute time frame. You can see we're about 70% in drawdown at the moment. Now we did have a bit of a protection line. Our protection line was this level here at 1923. From previous data, the 5 minutes kept tapping this, closing, respecting, and then bouncing off it and coming back up. So this was our last line of defense, if you like, basically. So if we did break below this, we'd probably look to get stopped out on this trade. But we had to watch price in around this area. Now, as you can see, the 5 minutes pushing. The previous 5 closed respecting. And this 5 minute was pushing. And it literally went to about 98% drawdown and nearly caught us out. But what happens is this 5 minute then pulls all the way back and closes respecting this zone. So our last line of defense is actually protecting the trade, and price is respecting. Now no point through this trade did any price, any candle close below that 1923.34 level. So what are we thinking at this point? Okay, if we can close respecting at this point, we should start coming back up as shown on this draw. Back up like that, back to our break even point, because also we're looking at a new hourly close now, and once the hourly close, we know that once the hourly closes below this level or respecting this level, that the next hour can actually come all the way back up and test the previous wick high. Okay, so therefore what we could do is either close out at break even or push past break even, actually close out for some profit. So that's what we were waiting for, and the first signs of that is basically lower time frame candles closing back into previous zones. So we basically wanted to close above 1923, and that would show price pushing back to the upside, therefore the hourly pulling back to test the previous highs. Okay, so now we've identified that the 5 minute within 5 candles has struggled to break below that 1923 zone. So this is a good sign for us. Also, we've had a new hourly candle open up, so we're expecting the hourly candle to come and test the highs back at least 1925, because that's what candles do, and they tend to test the previous candle high or low, whichever way it's going. So we've had a good 5 minute push on a bullish 5 candle, and then we've had 2 bearish candles, but we're still pretty confident that price is going to start pulling back now. So this comes down to we are stuck in drawdown on a trade, and price is actually looking that it's going to push down. Okay, why is that? It's because we know price has pushed up already. We've missed our opportunity to actually get out of our trade through to not doing our proper back test in regards to checking our previous data. Okay, so it's a bit of a human error on this one. What was good, guys got out and took profit. This is where we should have took profit and moved to break even here, which is about 10 pips there, but because I missed it, I got stuck in it, so it's my own daft fault. So at this point, I'm managing risk. How can I get out of this trade, or how can I make it still a profitable trade? So the way you make it a profitable trade then is you're waiting for price to close back in higher zones. You basically got to get confirmation that you're pushing back up, and that would be a higher time frame pullback, i.e. off the hour, or lower time frame breaks to the high. So what we said is, okay, if we get a 5 minute close above 1924.19, what does the 5 minute candles do? Well, we notice that price actually pushes to at least 1925.09, which is our break even on this trade. So every time you get a 5 minute close, you tend to push back up in that area. So therefore, what we decided to do is actually, so if we get a 5 minute close above here, we could look to take another trade, right? Another trade to the upside, so buy. And then what we do is we buy from 1924.19, and we take the profit up to our break even on our first trade. What we do then, we close out our first trade at break even, and the profit what we make is from this second trade of a second entry. Now it's very important that if you are doing two positions on one setup, that your risk management is on point. You're not over leveraging with your risk, okay? Because it is risky. You've got to really know how to read the charts and know what price is going to do, okay? So when you are doing your lot size and you're working out your risk, make sure you're safe to do this and it doesn't send you crazy and you start panicking, okay? Because you've now got two entries on this trade, okay? But this is a way where if you think price is going to be pushing down, you know you're going to get a pullback on a high time frame. You know you're going to get a pullback to at least break even of the first trade. Then you buy back up to the break even, close the first trade out at break even, and you make your profit within the second trade. So also, we're managing risk at this point, because if we don't get a close in that higher time frame, we're trying to work out, well, where can we close out of this trade? We know we're going to get a pullback. So if we got a 5-minute close to the above like that, right, then the next 5 would be the deciding factor of whether the price is going to close above and carry on up, or if you close back below and that whole move was a 5-minute fake out, that's when I was going to close the trade. And I was hovering around about the 1% mark, which is not a problem for me. Because if price does come back into that area, we're probably looking for price to come steeper, which would stop us out even if it wanted to go higher. So that was our deciding factor here. 5-minute close above. If we get a fake out, we're closing out. If we don't get a fake out, we should be pushing, and we'll look for a pending above back to our break even. So what we've done, we've had a 5-minute close just above that zone. So we put a. So what happened is price, we got that 5-minute close to the upside in that zone. So what we wanted is a little pullback. We wanted a pullback because we didn't want to get caught out with a fake out. Now we got a little pullback and we got a pendant on straight above the 5-minute candle. Okay. Now with the pendant, I believe we got activated pretty fast. I don't know whether the spread caught us or what, but we got activated pretty quickly. Our take partial and move to break even for this second trade was the entry for our first trade. Now the plan is here, as price pushes back up to the entry of the first trade, you can either close full or take partial and move to break even on the second trade, and that's where you get your profit from. But then you close out your first trade at break even, okay? And that is the whole plan in regards to this, because you're saying to yourself, well, I know price is not going to push to my original take partial move to break even because I already done it at the start and we missed to get out. So it's not going to go back up there because all price is doing is showing that's probably going to want to push back down. But we know it can still come back to that break even area. So it can still be a profitable day even from a potential losing trade. At this point, it actually took us a while for it to get back into profit. So the 5-minute actually closed below sort of the ranges towards our stop loss. And it took a while for it to come back into profit. So today's trade's actually been a really tough one. But why is it tough? Well, we knew it was tough. On our trading study with our members, we actually explained why it was tough. Because the daily, it's got indecision on the daily. The daily can just go up and down and consolidate all day if it wants to. Okay? But we were confident with this second trade, as we knew, because once you got a 5-minute close above there, price does tend to push to at least 1925.40. And as you can see, price does start pushing to that direction. See, we had another 5-minute close, and then price just shoots up nicely. Strength was nice at this point. So we had gold on 55.1, USD on 52.3, going down. So really good sign that price is getting strong. And what you can see is, you notice that the profit now, can you see the margin? The difference is actually getting back to break even and hopefully start pushing into profit. So you can see you're now not in minus anymore. You're pushing into profit. Now watch what price is like when we get to that take partial, move to break even, but also back to the break even on the previous trade. And you can see the type of profit we're in there. So we're looking at 500 plus at that point. Now, what I've done at this point, I just closed both at full. We'd been stuck in this consolidation zone for far too long. It was taking far too long for me. I like to be done by 10:30, 11 o'clock when I do my trades. I don't like to be on any longer than that. So, a pretty difficult day, really, on the charts for us. As you can see, price literally was so close to stopping us out in and around these zones. So, now, what happened next with price? It actually didn't even tap up to 1926. It rejected from here and then dropped straight through the floor. So it goes to show, if your analysis is right and you do your previous data check properly, we would have actually been out on this first trade here and had our money. But still, what tends to happen with our method is when you're wrong or you miss it, you tend to always get another chance to get out of the trade. And if you're reading charts correctly and candles correctly, there's always another opportunity to actually still make some profit. Okay, guys, thanks for watching. Have a good day.